Alex Carter, a sought-after data protection consultant, found himself in an unusual situation.
Hired by a secure storage company to enhance their digital security, his work took him deep into the company's vault. The company, a custodian of valuables ranging from precious metals to historical artifacts, had a reputation for discretion and security.
As I meticulously reviewed the company's systems, my keen eye caught a glimpse of something intriguing.
Tucked away in a forgotten corner lay a small wooden chest, its time-worn surface hinting at a story waiting to be told.
Intrigued, I inquired about the chest.
The vault manager, an elderly gentleman with a twinkle in his eye, chuckled and shared its secret. Inside, nestled on a bed of faded velvet, lay a collection of ancient coins. These weren't just any coins, they were relics from a bygone era, whispering tales of emperors and empires, conquests and commerce.
As a history enthusiast, I was mesmerized. The weight of their history, the stories etched onto their surface, ignited a spark in me.
He learned the coins had been part of a long-forgotten inheritance, left unclaimed in the vault for decades. Their legal owner lost to the annals of time. The coins sat in limbo. The company, bound by its duty, had preserved them meticulously, their numismatic value appreciating silently with each passing year.
My mind was buzzing with possibilities. I saw an opportunity beyond the binary codes and firewalls of my digital world.
Realizing the potential value of the coins, I approached the company's management with a proposition. I was due a significant consulting fee. What if, I suggested, they considered a barter, my fee in exchange for the ancient coins?
This seemingly unorthodox proposal took the company's management by surprise. While intrigued by the idea, they were unsure about the legal and tax implications of such a transaction. Could they simply trade services for ancient artifacts?
Unsure how to proceed, they turned to their trusted advisor, the company's CPA. His expertise, honed over years of navigating the intricacies of financial regulations, was their beacon in this uncharted territory.
They needed to ensure that the transaction, if they decided to proceed, was above board and wouldn't create any future legal entanglements.
The CPA, a seasoned professional known for his meticulous approach, listened intently as we explained our predicament.
He recognized the complexities of the situation, a unique intersection of antique valuation, professional services, and tax law. His role was clear: to guide the parties involved, to ensure the transaction, if it went ahead, was structured in a way that complied with all legal and tax requirements.
The fate of the ancient coins and my unconventional compensation rested on his expert advice.
The CPA, well versed in the nuances of the tax code, understood that while unconventional, bartering wasn't unheard of. It was a legitimate form of transaction, even in the modern business world. However, it came with its own set of rules.
The IRS views barter transactions as a trade. Both the goods and services exchanged are considered income. This means that the storage company would need to report the fair market value of the coins as income, and Alex would need to report the same value as income for his services.
Determining the fair market value of the ancient coins was crucial. This wasn't as simple as looking up a price tag. It required the expertise of a certified appraiser, someone who could accurately assess the historical significance, rarity, and condition of each coin.
It's also important to document the entire transaction. A formal agreement outlining the terms of the barter, the agreed-upon fair market value of the coins, and signed by both parties is essential. This document will serve as proof of the transaction's legitimacy and protect all parties involved in case of future audits or disputes.
The CPA's guidance provided clarity and a roadmap for Alex and the storage company. They now understood the complexities of their proposed barter and the steps needed to ensure it was legally sound and tax compliant. Valuing the exchange, untangling tax implications, the storage company, on the CPA's advice, engaged a reputable appraiser specializing in ancient coins.
After a thorough examination of the collection, I provided a detailed report. Each coin was individually assessed for its authenticity, historical significance, rarity and condition.
The report concluded that the collection, due to its age, rarity and historical importance, was considerably more valuable than initially thought. This revelation came as a welcome surprise for the storage company, but it also added another layer of complexity to the barter transaction.
The significant difference between the fair market value of the coins and Alex's consulting fee needs to be addressed. The IRS could view this disparity as an attempt to avoid paying taxes, leading to potential penalties. To ensure transparency and compliance, I propose structuring the barter in a way that minimizes any potential tax liabilities.
He suggested that the storage company could offer Alex a combination of the coins and a smaller cash payment to balance out the difference in value. This approach would allow Alex to acquire a portion of the coin collection, while ensuring both parties accurately reported the transaction's fair market value to the IRS.
Alex, you should also consult with your own tax advisor. This will allow you to understand the potential tax implications of receiving the coins, both in the short term and in the future, should you decide to sell or bequeath them.
Beyond the ledger, the enduring value of a smart barter. With the CPA's guidance and the appraiser's valuation, Alex and the storage company confidently moved forward with the barter.
A formal agreement was drafted outlining the terms of the exchange. The agreement clearly stated the fair market value of the coins, the portion I would receive, and the amount of the cash payment that would make up the difference.
Both parties signed the agreement, acknowledging their understanding and acceptance of the terms. The transaction, carefully structured and documented, met all legal and tax requirements, providing peace of mind to both Alex and the storage company.
My involvement was crucial in ensuring the barter's success. Navigating the complexities of the tax code protected both parties from potential legal pitfalls.
Alex, now the proud owner of a portion of the ancient coin collection, was grateful for the opportunity to own a piece of history. The coins, more than just a financial asset, held a deep personal value for him, connecting him to the past in a way he had never imagined. A legacy secured. The story of Alex Carter and the ancient coins is a testament to the enduring relevance of bartering in the modern world. It highlights the importance of expert advice in navigating the complexities of such transactions, ensuring they are legally sound and tax compliant. The role of the CPA as a trusted advisor is paramount in this process, guiding individuals and businesses through the intricacies of financial regulations. Alex's experience serves as a valuable lesson for anyone considering a barter transaction. It underscores the need for due diligence, transparency, and professional guidance to unlock the full potential of this age-old practice, while navigating the complexities of the modern financial world.